else.
Oh, there we go. Now we can hear you. So my name is Bonnie Halper. I write the Opinionated Startup One-Stop newsletter. Are you back on now, Tarik? And I'll post the so you can.
Yeah.
Oops.
Yeah. If somebody can unmute 646 number that's muted, that's my phone line.
Oh. Oh, I don't see that. Oh, there. Okay. Thank you.
Okay.
Does that work now?
Let's see. No, didn't hear anything.
Daryl's back.
What did I miss?
Oh, nothing. I was just telling everybody about Startup One Stop, and I will post a link so you can, join the news, the mailing list. And wrote a little editorial and accelerator deadlines that people should know about, and contest deadlines that entrepreneurs should know about, and helpful information, articles and things. And we host these breakfasts every 2 weeks with one investor and a small group of entrepreneurs. And usually the technology is it works a little better, but you never know what somebody's bandwidth is. And we want to thank KettleSpace for hosting us. We used to hold these meetings at the various KettleSpaces around town. In case you don't know, KettleSpace is very affordable restaurant co-working until this hit. And now they're an online platform, and it's fantastic because they host events, they're networking. It's a good way to reach out and stay in touch with people and participate in, different panel discussions, breakfasts like these. They have yoga, they have all sorts of things. And they even have online cocktail parties and karaoke, I believe, too. And it's free. The platform is free during this time.
So that's my handle everywhere, Daryl3000.
Oh, okay.
So I want to invite everybody to tag me, follow me.
And I was going to tell people, if you could put your LinkedIn contact in the chat, that helps too. So that people can stay in touch with.
It's the same thing at LinkedIn, Daryl3000.
I know, but you should post it because people will be coming in later and it'll be there. So Tarik we're still trying to resolve bandwidth issues.
Yeah. Can you hear me?
Yes.
Okay, so I'm dialing through my phone now, so I'm just going to try to use the phone, and I'll stay on video conference in case you want to see me.
Okay, great. So Tarik is our guest investor today. He's with Allstate Ventures, and he's going to tell us a little bit about his background, or as much as you want, and the fund, and what they look for, and the various stages. And then we will go around the room, and everybody will quickly introduce themselves, and then we open it up to Q&A. This is your forum here.
Absolutely. So, hi everybody. I hope you can hear me well. A little bit of issues, but that seems to be the norm these days. Yes. So I hope everybody's doing well. Staying safe. If I cut out for any second, please let me know. I have a chat open, so if you can't hear me, just type in, and I'll try to see if I can resolve the issue. But my name is Tarik Galijasevic. I run Allstate Strategic Ventures Fund. I like to think of myself as recovering investment banker. I started my career in New York. I was working with JPMorgan there for a couple of years, and then I moved to Chicago. So after getting my MBAs done, that was my first job. Now that said, my passion was always been, entrepreneurship. So one of my MBA concentrations was in entrepreneurship. So I always wanted to kind of get into either having my own startup or working as a VC investor. And as luck would have it, although the road was not perfectly straight, I managed to actually land at Allstate. And when the company decided in 2015 to form Ventures Fund, I co-founded with one of my colleagues who since then has retired. So what do we do at Allstate, and kind of how we think about the world? As I'm sure all of you are familiar, Allstate is one of the largest P&C insurers in the U.S. and we insure auto, home, and life, but then we try to do much more than that. So my team actually was involved in acquisition of SquareTrade, for example, which at that time was the largest insurtech exit for the startup that services through contracts, your mobile phones, your laptops, electronics, appliances, etc. We also recently acquired InfoArmor, which is in digital protection safety program. And what we are trying to do as an Allstate, we are trying to kind of think about innovative ways that we are not looking only to insure your auto and home, but we're kind of trying to insure everything that's connected to both your physical and digital assets. And we try to leverage a number of different brands and the businesses that we have in Allstate. So it's not just about auto and home and electronic service contracts, but it's also about roadside services, dealer services, voluntary benefits, and stuff like that. So the reason I'm mentioning all of this is many people are familiar with our auto and home insurance products, but they're not familiar with other business lines that we have. And from where I sit, I look to work very closely with all of the business units, and I also work very closely with our senior leadership. So we kind of sit in the middle of Allstate, where we are very much aligned with our strategic priorities as an organization, and we look to invest based on those strategic priorities, but at the same time, we also look to help our business units solve their unique problems and use cases that they have. So my team works closely with 14 different business units. We have regular meetings, interactions. We bring a lot of startups their way, even the ones that we don't plan to invest in, because at the end of the day, being a strategic investor, we have to check additional boxes before we can invest that financial investors don't have to do. So as a result of that, if we say that the average VC investor will look at 100 opportunities before investing in one, I would say for the strategic investor, it's more like 1 in 200. Now, what that doesn't mean is that those additional 100 companies, that there's not some that could provide value to Allstate, they just might not be investable for us. So I think we are a little bit unique versus some of the other CVC arms, is that we are able to help our business units, help them kind of run through our own procurement processes that are about 4 to 5 times faster than the regular ones, get startups engaged much easier throughout the enterprise, and kind of even help out, think through commercial contracts to make sure that startups get what they need, from the engagement, and they don't get bogged down in bureaucracy of the large corporation. And at the same time, Allstate gets to work with the startups that are going to generate returns ultimately for Allstate. I'll pause here for a second just to see if there's any immediate questions before I kind of continue describing what our focus areas are and in which rounds we invest and kind of how we think about the investments.
I wanted to interject that Tarik fairly recently won an award for being one of the top global investors. Is that true? That's true.
Yeah, that's true. Thank you very much for bringing that up. Yeah. So, I feel very privileged that, myself and the team were recognized for the work that we've done over the past 5 years, just trying to help grow corporate venture capital community, but also, help startups through a number of, different programs, mentorship and stuff like that. So definitely very proud, not just for myself, but proud for the entire team. In terms of investing, just so to give everybody kind of a little bit bigger perspective, the way we think about investing at Allstate is consumers at the center of everything. We serve the tens of millions of consumers in US and Canada, and we want to make sure that those consumers are provided the optimal service. So as we think about investing, we think about the technology that helps us understand and engage our consumer better and in the ways that consumer wants to be engaged. We look to understand and have a data that allow us to actually understand the risk that consumer is taking, so that we can provide the right set of services to keep those consumers protected from life uncertainties. And then also we look to invest in technologies that allow us to serve that customer better once, unfortunate event has happened. So ideally, what we would love to see, for example, when you have a claim and you go through an adjudication process, that, we can service it in a very, very short period of time, provide any assistance that customer needs, and basically minimize disruption to that customer. So what that translates in terms of our investing is many people think of, it's Allstate, so we should probably be investing in InsurTech and FinTech. And that's true, and we spend our decent amount of time there. But I would say the majority of our time is actually spent what we call insurance adjacent verticals. So we will invest in anything from connected car, home, and health that align with our auto, home, and life businesses, all the way to new mobility models, sharing economy, and then all the way to the deep tech and frontier tech that's down the line are going to enable us to serve those customers better. So we have a very wide focus area, much wider than many people realize. And then in terms of the investing, we look to generally invest A through C rounds, $1 to $10 million checks, and be very supportive and very engaged with our portfolio companies. So our goal is not to invest in 20, 30 companies a year and just let them on their own and see how well they perform. We are being much more targeted, and we are ideally looking to invest 5 to 7 companies a year where we have a board observer seat. I talk to each one of those CEOs at least once a month, anytime they need any kind of help as they engage with Allstate on the commercial side or on business side. You're there to help knock down walls if there's any walls and help them, have the optimal relationship and guide them through that process, because at the end of the day, we want to see these engagements be, successful for Allstate and help us accomplish our goals. And at the same time, see our portfolio companies generate revenues, get the good strategic partner, and get an investor that can help them think about their products and services going forward. We clearly have expertise in the insurance space, but then I try to leverage my expertise that I developed, doing investment banking and consulting. And we have a team with a wide range of skills that works closely with these startups and help them whenever they need something. So I'll pause here. Hopefully this gives you a good idea of kind of who I am and what I do at Allstate, but more than happy to take any questions that you might have.
And we do want to go around the room and have everyone introduce themselves and briefly talk about what they're doing as well.
Absolutely.
Do we want to do that now, or do you want to make any more points?
Either way works for me. So whatever people prefer, if there's a question that they want to ask, like when they ask the question, they can introduce themselves, or we can just have everybody introduce themselves and then get in Q&A session. Okay,
Victor, you're up.
Thanks, Bonnie. Hi, Tarik, that was great. And I do have a question for you. So just so you kind of see the context I'm coming from. So we have, the reason I'm on this call, and I've known Bonnie for a while, is we have an app that's essentially a super hotspot. I mean, this may or may not be applicable to Allstate, but you can essentially provide secure and fast online access for people who are working from home or out of the office. Because one thing I guess both you and Mac will notice is that your internet connection is a little shaky, but so we then resort to the cell phone. So our thesis is that the cell phone really is the the internet, the fundamental internet connection. And I'll circle back with both of you guys on that after this call. I would love to chat with you about it. But so my question for Tarik is, having been in both the VC world and the corporate world, what I understand you saying is at the time you make the investment, you're looking for the investments to fulfill 2 criteria, right? Number 1, it's a good financial investment, and number 2, it has strategic value to Allstate. Have you had situations where over time those 2 imperatives have diverged, right? So for example, you conclude that a company you invested in is no longer viable as an investment, but Allstate is continuing to use it, and they try to get you to support the company because they need it, let's say, as a vendor, even though you don't think it's a good investment, or vice versa, where it's still a good investment, but it no longer has strategic value to Allstate.
Yeah, I think that's a great question. Like, one of the things that we kind of pride ourselves on is that we do not want to have orphan companies. So what I mean by that is we do not want to get into the situation where we invested, but then there's no engagement with Allstate. So we are very careful when we are looking to invest, and we spend a lot of time discussing with the founder of what that's going to look like. Out of all the companies we invested, there's only one company that does not fit and doesn't have a commercial contract with Allstate. And the reason for that is that they got so much traction in the healthcare space for use of their technology that, I mean, we as investors wanted to make sure we are supportive of what's the best for the company. And that was, they're going to generate significantly more returns and revenues going in that direction. So we were fine with the situation. So that turned more into the financial investment rather than strategic. Luckily, I haven't had a situation yet where Allstate is using the company, but the company is not performing well, and thus we need to support them with the capital. All of our companies right now are financially stable. They have contracts with us, but they have contracts with other providers. So I've not had to deal with that situation right now. If that situation was to arise and Allstate is the only customer that's using it or the company has financial issues, we would probably evaluate it both from the investment standpoint, but then I would also pull in our corporate development department and see does it maybe make sense more that Allstate becomes an owner of that company and have them work on our projects rather than just, to continue to invest if you don't see the path further. I hope I answered your question.
Yeah, no, that's great. That's great. Thanks, Tarik.
Daryl. Daryl, do you want to introduce yourself?
Oh, yeah. Hi, guys. I am Daryl Sukhdev, known in cyberspace as @Daryl3000. So be sure to connect with me right there. That's it. So I'm a chef and an inventor. So I've invented a bunch of kitchen utensils that doesn't currently exist in the market. So I'm seeking investment for that, what you might call a traditional brick and mortar company. And that's the reason I'm here.
Okay. Yeah, I also wanted to mention to people when you introduce yourselves, please include your LinkedIn profile in the chat so that people can find you and stay in touch. And Mike, well, you're muted right now.
I was just getting my LinkedIn link.
Oh. And then I was going to say, tell us where you are as well, since people are all over.
Yeah, I was in New York for 23 years. A couple of years ago, moved out to the suburbs of the Carolinas. So I'm in Charleston, South Carolina. So in a pre-COVID world, I was, returning to New York an hour and a half by plane as opposed to car and train. And but unfortunately or fortunately now, I'm down in South Carolina and look forward to getting back soon. My work is in global technology. We help small startups up to publicly traded corporations extend their engineering capacity, leveraging a global workforce. So what our big business is traveling around the world doing on-site due diligence of the 8,000 plus service providers out there, of which we feel 97% really aren't ready for prime time, but 3% are really outstanding in what they do in terms of their ability to, vertical integration, vertical specialty, technical specialty. So we'll work with well-funded startups, even providing fractional CTO assistance and then helping them scale their teams quickly and cost effectively. So that's my work, and happy to have, follow-on conversations. For Tarik, I was interested to know, getting to meet people and understand, if, as you bet on the horse or bet on the jockey and not the horse, that you can't travel now. How has your business changed? The fact that if you're considering a new company, that you actually can't travel to actually meet them, and what are you doing to try to bridge that gap at this point?
That's a great question. Definitely it's been challenging from the due diligence standpoint, being able to kind of go through that final process and follow what we've done in the past. The good thing is, we've been over the last 5 years, we've been building a pipeline of the companies we've been interested in and just following them. So a lot of companies that we are looking to potentially invest these days are the companies where we met founders, we visited their teams, we kind of know what they're about, what they're doing, and understand their business. And we are evaluating them now more from the standpoint with all the changes in COVID environment. How can they help Allstate, from the standpoint of, if you cannot go and visit your customer, how can you service them properly if you're an agent, or if the customer cannot come to your office? So if there's claims event, how do you make this as touchless as possible? So there's a lot of these companies that we've known from before, and we feel comfortable proceeding with them. The ones that we've met during COVID that are coming, there's a lot of them, for example, coming from Israel. That's a little bit tougher. We clearly can't leave the country and, do much in that regard. So what we've been trying to do is organize, POCs or quick tests for them, do as much work as we can, and kind of position ourselves that when, either travel opens or when there's opportunity to meet more in person, be in position to do very quick round of financing. Now, the challenge is that some of those companies do need capital now, and some of them we may not be able to invest in just because we don't have that level of comfort, and some of them, like, we feel so strongly about the use cases that they have with the Allstate and the problems that they're solving that we're actually willing to take that risk. But we are thinking about that from the overall portfolio management standpoint and understand like what that risk profile looks like. So we're kind of trying to manage it overall as a portfolio, not just look at one or two specific companies.
Yeah, it's interesting. It seems most companies are taking that approach. Using your existing pipeline, and it's thoughtful. It's anybody's guess how long this thing's going to extend, and at some point, we're gonna that pipeline might run dry, or that there's going to be new companies coming up. So it'll be an interesting challenge over the next several months. Thank you.
Yeah, and we're already seeing that. And as I said, it's like if we feel so strongly about use case that we have and the value, we're willing to take that risk. But we know that our risk-adjusted return, it's a little bit tougher to get a good feel for that. And and right now we're investing in the ones that we know. And if we're in this situation a year from now, I have a feeling there's going to be more and more companies that we are going to do digital due diligence and try to, get to know them, get to know their team culture using Zoom and not necessarily being able to be there in person.
That's true. We're seeing that already.
Yeah.
So Jose, you want to say hello from Miami and tell us about yourself?
Yes, thank you, Bonnie. Hi everyone. Hello from Miami. My name is Jose Perón. Co-founded a company called Cura Market, and at Cura we connect what we call lazy health enthusiasts with professional local chefs who are interested in personalizing, preparing, and delivering their meals to them. We're very passionate about eradicating disease, and this is our small contribution to the greater picture. But my co-founder is also on the call. Krishna, do you want to say hi?
Oh, there you are. Oh, he's,
so originally, go ahead.
Oh, no, Chris is muted. Oh, got it. Go ahead.
You guys.
Go ahead, Krishna. Do you want to introduce yourself?
Oh, yeah. I'm Jose's co-founder. I'm based in Boca Raton, a little bit north of Miami, originally from Long Island. So, I jumped on a little bit late, so I don't really have a question for you, Tarik, but first virtual KettleSpace call.
Oh, welcome. Jose, did you have a question?
I did. Thank you, Bonnie. Tarik, I was just curious, what other startups have you invested in that aren't really, you had mentioned you don't just invest in one type of company. What other sectors have you invested in?
Yeah, so we've invested anything from like companies in new mobility models. So like, for example, think about the platform for like car sharing, ride sharing, autonomous and micromobility driving, to deep tech, NLP type of companies, to companies, supporting needs of gig workers. And then we've done a lot of investments on enabling technologies that improve our overall processes. So a lot of work that we've done with claims team, our data science team, our underwriting team, as well as a few other business units.
Thank you, Tarik.
Of course.
So who's next? I'm looking who's here. Well, there's somebody called AR who's muted right now. Would you like to introduce yourself, AR?
Hi, guys. I came on a bit late. So it's nice to hear you all and be inspired by all the incredible things you're doing. So very cool. I'm working on something for COVID. I'm a geneticist, and I'm trying to work out the next steps of how to get funding for clinical trials. So I thought this would be a very interesting talk.
Gotcha.
Where are you based?
I'm actually in South Africa.
Okay.
Yeah, I mean, like I know a lot of startups have seen some struggles or at least delays when it comes to capital raising. The ones that are trying to solve COVID issues, but then there's also applicability in this new world as people think our behaviors are going to change or medicine is going to change. I've seen a lot of traction and a lot of interest in that area. So hopefully, you're able to get investors to support your efforts and look for some of these solutions that we definitely need.
Tarik, I appreciate what you're saying. And I wanted to ask, how does one go about getting investors? I mean, I've worked on a pitch deck and so on, but do you just send it out to people? Is there a strategy about it?
Yes. So there's no perfect strategy because every investor is different. I know some people who will never respond to a cold call or cold message, and the others ones that are supportive of that. What we try to do within my team, and we develop a system for very quick processing. I've divided it within my team. Everybody has their specific areas of responsibility, and if the startup sends us a deck that falls within that area of responsibility, we are quickly able to figure out who should take a look. And if it doesn't fit anything we are doing, we will very quickly let you know and why, because we feel the feedback is good, especially as a startup, you don't want to be spending time thinking you have a great application in insurance space when there isn't, and you're spending time and resources there and maybe be missing opportunity in some other sector. The ways we've done it, like there's a link on our website that you can click on and send us the information. The critical part that I would say when you send and try to get somebody's attention, people don't have much time to read emails. So if you can, in 2-3 sentences, tell them what you do and why they specifically should care about, and be able to tie to either something that they've invested in the past, it's a focus area for them to pique their interest, then you're going to get your deck or your information open. If that's unclear, or if it's a very long email and it's like, or even LinkedIn message, and the investor doesn't know you and seems like it's going to take too much time, you're probably not going to get them to read it, and thus you're not going to get the response.
Brilliant. That's brilliant. And can I ask, and I'm not meaning to put you on the spot, but what is your website then to check that out? Because I found this through KettleSpace.
They're putting up a Oh, she wanted to know your website. Did you put it up now? I didn't do the link because you hadn't had it.
It's AllstateStrategicVentures.com.
Thank you so much. Thanks.
I'm also an expert in this area. Trust me, I know all the investors. In the weekly newsletter, when investors do office hours, which a number of them do, we always post it in the newsletter in different contests and things. Use LinkedIn. Warm introductions are always the best. See who that investor knows, and try to get a warm introduction. That always helps.
So not directly on LinkedIn to that person, but through a mutual acquaintance. Is that right? Mm-hmm. And Bonnie, how do I contact you then as well?
I put my email, and everybody should put their LinkedIn. And I have the Startup One Stop. That's my newsletter. And I posted it in the chat. Everybody should put their LinkedIn contact.
Thanks. Thank you.
Okay.
Thanks so much.
So Jason. Oh, you're muted right now.
Yep. Thank you so much. Good morning, everyone. I hope everyone's doing well. Thank you so much for putting this really good program together. My name is Jason Velasco. I work in an area called electronic discovery and information governance. And so basically we bridge the gap between technology and the legal services group in terms of managing the workflow and then providing advisory services wrapped around technology. So primarily I work with large scale corporations, mostly financial services, large pharma, and helping them kind of manage their data from basically how it's managed within their organization, connecting and identifying their sources, and then eventually being able to locate it, search it, preserve it for legal purposes. So that's basically what I do in a nutshell. I've been in this space both as this is my third startup. I've had one that, Got started with credit cards in the living room and grew to about 35 million. And then I've had a couple that actually failed. So I've kind of been through both sides. But on the e-discovery space, I've been in this area now for 25 years and have a lot of both experience and credibility and experience. One of the challenges that I'm trying to do is, we've developed, myself and some people that I've brought along with me have developed, in essence, a technology architecture to basically tie that whole workflow together using a lot of common technologies around cybersecurity and Microsoft 365, which is where a lot of organizations are going. Where I'm struggling with dealing with investors is I've got this technology component that I need help and investment in terms of building. I'm in the process of launching, and I expect it. I could literally just set up an advisory services and compete in the marketplace and do that and self-fund that. But at the same time, it's hard to focus on building an advisory practice and at the same time building a technology brand and effort, as well as find investment to do it. And it's not a lot of, it's not, I mean, we're not talking $4 million, we're talking a couple $100,000 type of investment. So I'm trying to figure out how to bridge that gap and take that message to an investment class of folks.
No, that's a good question. I've seen companies struggle with it because you really need to decide if you're like consulting company or if you're, a SaaS provider. And the challenge there is that people have to feel that there's a big enough market and the customers for your service to invest as a venture capital investor. And if you don't, then you kind of need a different type of investor because you can build the business. It's actually a very good business and you can be making, I don't know, 10, 20, $30 million of revenues and have a good EBITDA, but it's not going to get to the scale that the VC investors look to invest. So it's really understanding what your business can become so you can go after the optimal type of an investor. And sometimes VC investors are not the best one to go after. Maybe you want just, some, private wealth family or somebody else to invest that capital because then they care more about the different types of metrics. Mm-hmm. And especially if you can develop a business that, can generate a lot good cash flows and positive cash flow, but really is not going to be huge in size. So it just comes down to knowing your company and knowing what the best investor is for it.
Okay.
And
Thank you.
go ahead.
I'm sorry. No, sorry, Bonnie.
Oh, I was going to say there are funds that invest in what they call lifestyle businesses. I know Indie VC is one of them, but they are out there.
That's awesome. And is there a good source to kind of locate those? I mean, because again, it's friends and family and angel type money, right? And so I guess that's those are those type of kind of sites and resources.
Right. Well, Indie VC is one. There are more and more of them. You just have to research. I can't think of them off the top of my head, but they are out there, especially now.
All right. Mm-hmm. Yeah. Thank you so much. I really appreciate all the effort.
So, Monica, you want to unmute and introduce yourself? Nope. Oh, you're muted, Monica. Or maybe she's shy. So, Brandon, do you want to unmute and introduce yourself and tell us who you are and what you do?
Absolutely. Sorry I joined a little bit late. I didn't get the link actually until about 10 minutes ago, so that was a bit weird. But nonetheless, my name is Brandon Galijasevic. I'm a commercial real estate broker based here in Long Island, New York. With regard to investments right now, I just have some cash that's in the stock market, but I always want to learn a little more and see how I can improve my investing. So that's why I'm here.
Hey, Brandon, I'm having a hard time hearing you. I'm not sure if that's the case for everybody.
I don't know if everybody else heard me.
Yeah, I heard you.
Okay. Yeah. All right. I am a commercial real estate broker in Long Island, New York. And in terms of investments, I have just some cash that's in the stock market. But I do want to learn more about various types of investments and whatnot. That's why I'm here.
How's commercial real estate these days? Pretty funky, right? It looks like you're in New York from your background.
Yes, that's me in the city. Well, I was dealing with office space predominantly,
Right.
more specifically tenant representation. So, when you're in commercial real estate brokerage, it's like trying to climb a wall with one arm tied behind your back. But now with COVID, it's like two arms tied behind your back.
Yeah.
So it is a little bit difficult in that regard. And there are a lot of companies that, realize that they don't need office space because they'll have their employees work from home. So there will be a lot of vacant office space, unfortunately. So I might have to pivot, go into warehouse space, investment sales, something like that. So
Thank you. So Monica, I'm sorry, I see that you unmuted. I didn't mean to cut you off. Do you want to introduce yourself and tell us what you do? Oh, we can't hear you. And I know that you're not muted. Oh, now you're muted. Oh, we'll come back to you. Don't worry, I won't forget. Deborah, do you want to introduce yourself? Oh, Deborah, you're muted as well. Oh, I wonder if people can't hear me. I'm not.
Yeah, I think maybe whoever is running the meeting might need to unmute whoever's muted. I knew I had a similar challenge initially.
Oh, all right. I'm asking them to unmute.
Yeah, I can hear you, Bonnie. That's fine.
Okay. So in the meantime, Robert, you want to introduce yourself? And you're muted as well.
Yes, I'm Robert Friedman. I came on late, but unfortunately I was on an investor Zoom call for my own business, so it went much later than expected. But I've got a company called Tech Prefab, and I'm based in New York, but I have a partner in Pittsburgh and in Silicon Valley, and we design and build prefabricated buildings with our software front end and our back end supply chain. So we can build what they call ADUs, small homes that are big in Silicon Valley where land's expensive. People build little homes in their gardens, in their backyards, and rent them out. And but we could also build 100-unit multifamily buildings, and it's all built in factories, and then we ship them in containers, pretty much 80 or 85% built, and then do all the finishing touches on site. And that's what we're doing. We have not really raised any venture money. We had originally had angel money, and now we've got revenues from sales. But I think that if we really want to grow in the near future, we might need to do some kind of round. So I'm interested in hearing about venture.
What's your website, Robert?
It's techprefab.com. I've
been telling people you should post even your websites too and your LinkedIn information in the chat.
Sure.
Yeah, let me introduce you to Brandon. He's in real estate and is looking to pivot, so you guys might be able to work together.
Oh, sure. So yeah, that's the website.
Absolutely. Robert, I'll put my LinkedIn, and not just for you, but anybody who would like to connect would be a pleasure. So thank you once again.
Sure. I will put my LinkedIn also. Hold on. Let's see. Should I have that handy?
That's like, see, serendipity. It's very important to participate in these networking sessions.
Oh, absolutely.
You never know who you're talking to and who else is in the room. Yeah.
Right.
In person or here. So I'm going to ask Monica or Deborah to unmute one more time to see if they want to introduce themselves, or maybe they're having technical difficulties. It seems like several people are today. Low bandwidth, etc. If not, we'll open it up to Q&A.
So sometimes folks may not know how to do that. So you just bring your pointer down to the bottom of the Zoom window, and the navigation bar will pop up. And then all the way over on the left, you'll see a microphone, maybe with a, and you click on that to unmute.
And maybe they're just shy. Or they want to be flies on the wall. Does anybody have a question? Somebody always has a question.
I missed the whole beginning, so I don't feel right asking any questions.
Please feel to fire away.
We do have a couple of people who came in late, so you want to give us just a brief overview, Tarik?
Yeah, so just for just 2-minute overview. Yeah. So I run a strategic ventures team for Allstate. We are very much a strategic investor on behalf of Allstate Insurance Company that I'm sure all of you know as a big P&C provider in U.S. Although we are focused on auto and home, we have a number of different businesses ranging from life to service contracts for your electronics to digital safety protection, roadside services, extended warranty contracts, etc. Work very closely with our senior leadership as well as each one of our business units on helping Allstate solve the problems that we have or the use cases that we have both in the near term as well as the long term. So my team's main role is to kind of see what's coming behind the corner. And we don't just do that in InsurTech and FinTech space. We look at much broader from, IoT to new mobility models, sharing economy, all the way to deep tech and frontier tech. We look to invest A through C around companies, $1 to $10 million checks. And ideally, even if we don't have, plan to have commercial contracts in the near term, we definitely plan and see the path of getting it in long term. So the way we think about our investments in terms of horizons, Horizon 1, we work very closely with the business units on, making sure that we have the right type of engagement. And for Horizons 2 and 3, we work closely with our investment committee, which includes our chairman and CEO and all of his direct reports.
So how broad is this definition of what's strategic for Allstate?
It's much, much broader than people think, So like generally, if you think about Allstate and insurance, you think about InsurTech and FinTech spaces. But if you think about what it will take to serve our customers in the best possible way, understand the risk that they're taking, be able to properly price that risk, and be able to serve these customers when the bad things happen to them. There's a lot of technology that's right now being developed in parallel that's going to all have to come together. So anything from like IoT to edge computing, 5G, AI, ML, we will look at all of that and kind of help put it together in a way that at the end of the day, there's a lot of complexity on the back end, but what the customer sees and how customer interacts with Allstate is actually very simple on the front end.
Mm-hmm. Okay, interesting. Because I get these angel deals sent to me all the time. I had a fintech one last year that might be of interest. I'm not sure if they're still raising money, but good to know that it's fairly broad. I assume fintech is like right on target.
Yeah, it depends what type of what's in fintech. If it's like neo banking, probably not as interesting. If it's underlying technologies, that prevent, for example, fraud or improve customer engagement and that it's transferable to insurance, absolutely.
So anybody have any questions? Although we have a latecomer, Kyle. Kyle, do you want to introduce yourself? Unmute and introduce yourself and tell us, where you are, what you do, and if you have any questions for Tarik. I wonder if people are just having technical difficulties today. Oh, there he is.
Okay.
Oh, go ahead. Oh, Mike, go ahead.
Yeah, Tarik, I was going to say, how active of an investor would you characterize yourself or Allstate as being? There's some investors that just provide the capital and have more of a hands-off approach. Others might, by disposition, be much, much more active. Others, it might be a case-by-case basis. But how, as far as your Rolodex and your connections and your ability to sustain that, to propel the business beyond just capital investment, how would you describe your approach?
Yeah, I would say we are very much hands-on. So we work very closely with our portfolio companies, and a lot of companies that we will find and invest, we'll find their technology initial use cases are not necessarily in insurance. So like an NLP company that we invested, that's actually in New York, their entire initial use cases around banks and hedge funds. But what we realized is the underlying engine that they had could actually, it was very sophisticated, it could be leveraged for other use cases. So we identified 4 or 5 use cases internally within Allstate that they really never even thought about. So we brought them in, we had conversation, we did a test with them and a couple of other parties where they perform exceptionally well. And then we basically decide that we're going to engage with them and provide them subject matter expertise as we look them to develop all of these other use cases that initially they're applicable to insurance, but we don't want them just doing something that's applicable to insurance. We want whatever they develop to also be applicable to other verticals as well. So we give them subject matter expertise. We help them with the advice. We'll provide them like data scientists to validate some of the things that they do. We teach them on how to build, for example, dashboards that would be used by companies ourselves, and kind of help them understand of how this process within big corporations work. Because although they have a great technology, et cetera, that's one thing. Being able to use that technology, integrate it, and actually provide ROI to the corporate is something completely different.
Mm-hmm. No, thank you for that. And in a pre-COVID world, a lot of VCs were insistent on having, all the core team, and this was beyond C-level, like CTO or CFO, but even the teams behind them, all as full-time employees. And I think implicit in that was that they were all co-located. Now in the post-COVID world, how do you see did you have that imperative in a pre-COVID world, and what does it look like at this point where, in many cases, work from home is turning into work from anywhere and for an ongoing basis? How integrated, or what parts of the team must be full-time employees, and what part might you permit to be outsourced in this case?
Yeah, that's a great question. Like, one thing that people don't necessarily realize about Allstate is that we have big technology offices in Europe, in Northern Ireland, as well as in India. So we're actually the largest tech employer in Northern Ireland with a few thousand employees there. So as you kind of think about how we work on some of these projects, and especially when it comes, in my mind, technologies, we start with technology and then go with everything else. We have different campuses in US, then we have campus in Europe, campus in Asia. So we've been already working a lot in different time zones and syncing people up and having that continuous 24/7 type of support and engagement. So there's obviously challenges in terms of, like when people are not necessarily in the same room if they used to be on their agile teams, etc. Like you depend a little bit more on the technology when you work from home. But in terms of like people staying coordinated, being distributed all over the world, and even working in an asynchronous manner, we've been already doing that for a few years. So that has not been as a big of a challenge during COVID as some might expect.
And for your the investment companies, would you avail those companies to that capacity in Northern Ireland or India or what have you, or you allow them, or is it you leave it to them to try to figure things out?
I mean, we'll offer them support. We ultimately leave it to them to figure out. So I have companies that, the entire team is located in Bay Area, and they work closely together, to companies that, like one of our portfolio companies, literally on 5 different continents, to one company that it's pretty much like almost nobody is in the same place. And what they do is like they're distributed virtually, and their thesis was, we just want to hire the best people and give them the benefits to live where they want to live. But the way we installed the culture is like on a quarterly basis, they would have these team building events where they would spend like 7 days, I don't know, in like San Francisco, 7 days in New York together and everybody. And that would allow them to build that team and camaraderie. While then they would go on for the next 11, 12 weeks, they would work in a separate location, but using Zoom and other tools, like work together on the projects.
Thank you.
I will say that
I have a question. What's the key to finding a lead investor?
$1 million question. Yeah, I would say you want to find the lead investor who really believes in you, your vision, and what you can become. And it really depends what the lead investor you're looking for based on the stage of the investment. You know, I think of lead investor for seed round very differently than I think about the D round investor and what they're going to look for. But the way I think about investing in startups, to me, this is a long-term commitment. You can, you know, compare it with dating or even marriage. Yes. And it starts with having the right relationship between the investor and the entrepreneurs. And then the second thing is that I would say, as you look at, like, it's very easy to get in love of like trying to raise capital, and that's what you need because every single startup is capital constrained. But what I would say it's more important is to have the vision and be aligned of how you're going to accomplish that, and then be able to leverage the skills of the investors that can help you out, you know. So like if you are in the food space, like, and maybe you have something that's interesting to somebody, but if they've never invested in food space and they're like invest tech, they might not be the best investor for you, although like they have interest in that. So I would, you know, compare those things. So me as an investor, when I'm either looking to lead or join the rounds, I look at kind of like three main T's, which are team, it's a technology and attraction. Before I ever even do that, I assume that I believe it's solving the problem and I need, and it can be in a sizable market, whether it's in insurance or not. So those are the underlying assumptions that I start with, and then these three T's that I kind of evaluate based on.
Got it. Thanks.
You know, speaking of, you know, you mentioned that it's like a marriage, and we had David Arcara from Laconia Ventures speaking at our breakfast a couple of years back. He also said, you know, everybody thinks that getting into bed with an investor is like a marriage. And he said, it's not. And with all due respect, Tarik, he said, you know, if the marriage goes south, you can get a divorce. He said, you are stuck with me for the life of this investment. Choose carefully, get to know your investors. And it's absolutely true. Wouldn't you agree, Tarik?
Yeah, I mean, the reason I would say it's like a marriage, you have to make compromises all the time, you know, and there's some of the decisions that you guys have to be aligned. Again, there's certain investors that if they don't like where its company is going, but the company has potential, that they can be replaced by some other investors who are willing to come in and, you know, sell in secondary markets. So I would say in that regard, it's like marriage, but I agree to the point, Bonnie, you're making as well, that also holds true.
Yes.
You know, there's been a lot of press lately about Lemonade, and I'm just curious. You know, Lemonade is a very successful startup competing in your space. Did Lemonade show their deal to you as a venture deal? How do you view what they're doing? Why aren't, you know, why didn't bigger insurance companies do this, or have bigger insurance companies invested in them? I'm very curious about that, because it doesn't seem to me that they're really disrupting the home insurance model. It just seems that they built a nice front end, and it didn't seem like something that would have been impossible for other insurance companies to do.
Yeah, absolutely. So we generally will not invest from the venture standpoint in the startups that are looking to compete with our businesses. So on the insurtech side, you know, I do not see us investing in companies like Lemonade, Root, you know, a few others. We will invest more in the enabling technologies that help us get better. You know, I mean, Lemonade does some things really well, and there's some things that are going to be challenging to them. What I'm going to say, insurance space is inherently difficult, and there's lots of complexity. I mean, it's like one of those rare businesses where you don't know what your cost of goods sold are when you're actually selling your revenues, which makes it tough. And then it's very regulatory driven. So as you kind of think about what it takes to scale the insurance company, how much capital that you need to put in, especially as you grow, and how much you need to invest to kind of serve what departments of insurance need and how they want to protect customers. It's a very, very complex market. And there's reasons why, you know, not many companies have been able to, you know, necessarily be successful. And you have these behemoths like Allstate and Progressive and Geico and State Farm, and it takes a while to develop. So, I mean, Lemonade, I think, has done a great job of building the technology. And, you know, if Allstate was starting today, or I'm sure State Farm or Progressive or others, we'd probably build it on a similar technology stack, et cetera. Where the challenges really come is distribution, customer acquisition cost, regulatory environment, and just simply scaling. So we'll see. I mean, they've definitely had a successful IPO, and the stock price has done well, but it will take a few years for them to prove whether they're here to stay, or, you know, it's just, you know, novel thing right now, but then they get caught up by some of the incumbents.
Got it. Thank you.
Anybody? Any questions? Somebody always has a question.
Like, Tarik, I was just a quick question. I mean, we had talked about kind of, because it's more of advisory. Would you suggest that if I really wanted to focus and potentially spin off the technology side of things, how do you recommend transitioning from being an advisory firm to a technology firm? I mean, again, we have the expertise and the knowledge and the capabilities to actually build, and we understand what the workflows are. What we've learned as part of our advisory practice is that automation and technology is the key to basically a technology-enabled service. So if I were to pivot and say, okay, let me rebrand and maybe spin off another, and spin off the technology as a separate organization, is that something you see, or would that be your perspective, just watering down the technology pitch and still focusing on the advisory side for revenue?
Yeah, I'm more than happy to talk to you separately. Like, I don't feel like I have enough information to tell you like one way or another. So I don't want to give you the wrong advice, just, you know, making some assumptions in my head. So more than happy to learn a little bit more and then talk to you offline and see if I can provide better advice.
All right, thank you so much. I appreciate that.
Tarik, I have a question. From your perspective, what has been the riskiest investment you have made, and why did you make it? Was it away from your thesis? What about that team?
I mean, all the investments in startups are inherently risky. Like, when you just look at the stats, you know, like, you have to, if you're going to be startup founder, you have to have that really amazing mindset, you know, to like go after, you know, and start the company and be successful. And then if you're an investor, you really have to kind of play 5-6 moves ahead and think about what this company is going to become. So I would say, like, we have one of the investments that, like, there's lots of work still to be done around the product side and in engagement with their customers. But the fact that they're going after gig economy and part-time workers, and how big of the market that is now and how big we expect it to be, if we combine market size with a really exceptional team, then you start to believe if anybody can figure out how to make this work, they will be the ones. And if they do, they're going to be like a unicorn. That's how you make an investment. You have full expectation that, you know, in some cases that might not work out, the product might not resonate with your customers, and that you very quickly find out that they're not working out. But if they do, you know, it's a unicorn. So the way I think about it in terms of some of the investments as I build the portfolio, some of them are going to be doubles, you know, some of them are going to be triples. You know, you're not going to hit, you know, a home run with them, but you also don't expect that they're going to go down. And then as you kind of build that portfolio, you work toward getting those returns that, you know, your investment committee expects.
Are you usually looking for a 3x return within 5 years?
It really depends what stage it's at. You know, and us as a strategic investor, there's that other element of what is the ROI that the business units are getting. So like right now I have one investment where we literally, our business unit is saving $25 million a year. So put that against our cost of capital, even for like 5 years, there's almost $100 million of value there, you know, so it's hugely valuable. So if on that investment I return 2 times, and I'm not saying I will, this is successful investment, we've been perfectly fine. And on the opposite end is like there's maybe no business return. So then you're looking for significantly higher financial investment, or business return is minimal. And then you're looking for the higher return, and it really varies by stage. I expect higher returns for when I invest in A round versus the B or C.
Thank you, Tarik.
Absolutely.
Tarik, I have a question. I'd love to know your viewpoint on autonomous driving, because it seems like it's less of a technical question, but it's more of a social question, i.e. will people get into a car? But also it's a liability question, because if you're at level 5 autonomous driving, I don't need the insurance, right? Because I'm not driving. And so who has the liability, and who has to be insured in case there's an accident?
There's still going to be for some type of insurance, and whether that insurance becomes more commercial versus personal, that we can debate that. And obviously, if there's an accident, so if the autonomous car is driving and all of a sudden the tree falls in front of them, and it has the decision to make whether it hits the tree or maybe swerves to the side where there's people, there's going to be some liability associated with that. So there's going to be roles for the insurance companies in that regards as well. Right. To kind of answer
not my problem, right?
Yeah, to kind of answer your more immediate question, so I would say our view of autonomous, and in general markets view of autonomous, have changed. And it also really depends what kind of autonomous you're talking about. If you're talking like level 3, that's something completely different than level 5. When we say technology challenge, like level 5 is actually really tough technology challenge. It's not something that's going to happen overnight, and there's still a lot of work to be done. As you get to level 3, 4, there's obviously going to be some societal impact. The one thing that people don't often think about it, even if we were to have like autonomous driving in 5 years, majority of the cars on the road today are about 11 and a half years old. It will take a long time to kind of like change the fleet. It's going to take time to get people comfortable being inside autonomous cars and doing all that. So from the personal standpoint, it's going to be some time. Now, if you say that the sharing economy, even post-COVID, is going to come back and people are comfortable being driven around, Ubers, Lyft, or like car sharing, etc., then you can see more and more use for autonomous, because the way those companies are going to make money is if the driver is not in that mix, because that's one of the biggest expenses. It's the biggest expense, the second one being insurance. So if you can solve for those two, all of a sudden those businesses look different. So it's going to actually, in my opinion, it's going to be really interesting to see what the impact is going to be in post-COVID, and then kind of how people feel about it. So, and then technology still, as I said, like level 3, 4, yeah, and I can see the path there. Level 5, much harder. Any other questions? Sorry.
I just wanted to follow up on Victor's question. There's a company called AI. The founder is kind of notorious for. Sorry, go ahead.
I'm having a little bit hard time hearing you. Do you mind repeating the question?
Oh yeah, there's a company called Comma.ai. It converts regular cars into autonomous vehicles. Yeah, you've heard of it?
Yeah, we're familiar with pretty much all those companies that operate in that space. It's kind of difficult to talk about those companies, because all it takes is like few accidents where people get into the accident where you cannot determine what's responsible. It's either that retrofit or something happened with the car, or how the consumer reacted. So I think there's going to be, again, like I'm not saying that it cannot be solved, and if at some point that might have to be part of the solution, because people might not be able to afford fully autonomous cars just because the price of all those systems is going to be really high. And I mean, today, think about just what the cost of LiDARs is, it will come down over time, but even still, like, I mean, if you look at what's happening in the economy today, and people's ability to spend capital might not be the option, so they're going to look for those like retrofit solutions. It's something that we will, and I mean, there's still a lot of work to be done on our end to understand what that looks like from the liability standpoint. And the one thing in insurance is you need a lot of data. And when it first starts, and when you're just looking at few cases, there's not enough data for actuaries to build the models. So we have to be we have to get creative into like understanding of how maybe we can test through the simulations, how we test in a different environment, and get comfortable what that risk are and underwrite it. And again, I think it's going to start on the commercial side before it gets into personal side, just because companies on commercial side have more incentives to go down that path, and it's easier to mandate, drivers and employees to do something than it's just regular consumer.
Yeah, totally agree.
Yeah.
Anybody else? There's your chance. No?
Yes.
Nobody.
Sorry about that, Bonnie.
Go ahead.
Yeah. I just wanted to know, what is the typical ROI that you look for when you invest in a company? Because I obviously know venture capital companies look for a much higher return than an institutional investor. So I was curious.
Yeah, it's very much proportional to the risk you take. So, as you think about it, your high grade bonds are way low interest rate and your high yield, similar to like what private equity investors, they need to generate significantly higher returns than, public stock market investors. Same with the venture capital, like it has to be proportionate with the risk you're taking. So it's one of the most expensive sources of capital. So that's why I'm like, when you're thinking about, investing or taking money from the venture capitalists, think about what options you have, how you want to use that capital, and make sure that you're raising the right amount, because sometimes startups make a mistake and they raise too much and they cause too much dilution, especially if they're successful. Sometimes they don't raise enough and then they have challenges reaching the milestone. So capital is expensive. VC capital is definitely expensive. So be conscious of how you take it, how much you take it, and what that looks like. And then also understand what's the value you're going to get from the investors. Now, in terms of the specific numbers, that like what you want is, as I mentioned before, like Series A, over the portfolio, will want specific type of return. But when you do the initial projections, when you invest in a company, you're hoping on MOIC basis that you're going to get a higher return than a B round company. Now, that's compensating you for knowing that more A companies will fail than more than the B companies. So to make long answer short, it's going to be one of the highest required rates of return of any capital out there, and financial VCs probably going to have higher than the corporate VCs, just because corporate might generate some value in the business engagement, that when you add that together with the investment returns, you kind of get your returns that way.
Awesome. Thank you. Appreciate that.
Absolutely.
You do want to get as much market traction and revenue as possible, because then you get better terms. In fact,
of course,
when Steve Messer spoke at our breakfast, he said, why do you, and he is a VC. He said, why do you want money from a VC? You probably get better terms from the mafia, which he was not encouraging anybody to go to the mafia, by the way. I did not want to send out that message to anybody. But Victor had a question.
Yeah, just very quickly. I'd also love to get your thoughts on facial recognition, right? Because my thought is, from an insurance and a liability point of view, the more you know about who's, who people are, what they're doing, and so where they are, right? It would help reduce the costs. But there does seem to be a societal move against facial recognition. But at some point, do you think the technology will advance to the point where it'll become inevitable?
Yeah, I would say, like, you want to make sure that your customers are comfortable with what you're doing. So there might be some, financial benefits, you can potentially reduce costs and stuff like that, or reduce fraud. But then you also want to be conscious what makes your customer feel comfortable. So we are very conscious about that, and we would never do as a company anything, like, even if it's going to generate better returns for us, that would actually impact of how customers perceive us or negatively affect our brand, because long term, that short term game might not justify what we would lose the long term. So it's very much with the market. There's a number of technologies out there that I know, like, if insurance companies or any companies wanted to implement, they could, but I'm not sure that the customers would feel comfortable with it. And thus you make the decisions around that. And Allstate, as I mentioned, like, for example, with InfoArmor acquisition, is we are trying to make sure now that we protect customers not from the physical challenges in the world, but also from the digital. So we are very much about protecting our customers however we can. And the last thing we would want to do, betray the trust. So we are very much conscious about protecting our customers.
Thanks.
We might have time for one more question if somebody has a question. And Tarik, do you want to share your contact information either here or in the chat or?
Yeah, I'll put my email address in the chat. I'm holding my phone right now. So,
okay.
If I can jump in here, Bonnie, I just shared.
Oh, okay.
I just shared a spreadsheet everyone can open, so you can all kind of share your contact info in there, and so everyone will have that kind of after this meeting ends. So just copy and paste that link. It's right above Tarik's email. That link in there.
Oh, great. I didn't know if we'd lost you, Max. Sorry.
No, I've been in the wings this whole time.
So anybody else? Last chance. Well, Tarik, I want to thank you for participating and for imparting all this information. And I want to thank the attendees for participating as well and sharing your backgrounds and asking great questions that are probably help to enlighten everyone here. And like I said, you should sign up for the sheet and stay in touch with each other. Just because you can't meet people in person doesn't mean you shouldn't continue to network and make connections.
Absolutely. Right? Thank you for inviting me. I definitely enjoyed chatting with you, and feel free to reach out to me if you have any additional questions that I wasn't able to answer today.
Okay. Oh, there's your email. Great. Thank you, everybody. And like I said, we host these every 2 weeks. And in 2 weeks, we have Thomas Wisniewski, who Tarik knows, Thomas and Allison from Newark Venture Partners. And they also do Newark Venture Partners Lab. And they have a deadline coming up. So that'll be July 23rd.
Awesome.
So thank you, everybody. Have a great day. Stay safe.
Thanks, Bonnie.
Thanks, Mac. Thanks, Tarik.
Thank you.
Bye.
Thanks, guys. Tarik.
Bye.
Thank you. Bye-bye.